Hello everyone, and welcome to the Open eCrime Market Commentary for the week of May 29th. My name is Toby Gennaro, and just coming to you here with a look at the U.S. indices and some foreign currencies and commodities for the upcoming week, and taking a look at where the markets might be headed. And just getting started here with the ES and some of the U.S. indices, taking a look at the S&P 500 futures. We've been talking about these the last couple of weeks, and I just still have this Fibonacci retracement level drawn in from the most recent high several weeks ago, couple of months ago actually, and then to that most recent low quite some time ago. And we still have this 62% retracement level with that support level right in there around 1270, 1265 that still has some potential to get to. We're pulling right back up into the moving averages. Currently, we're heading right back into that 1340 level. So not necessarily bullish on the indices here yet. We still think there's more room to the downside. There's probably still some more bad news out of Europe still to come out. But in any event, looking at some of the other time frames here, like the daily, we're getting a little bit of a move right back up into the moving averages, where more than likely you're going to see some selling pressure. Somewhere up around potentially this 1350, 1355 level, and then you also want to keep that 1340 level in mind as well. So we already have a bearish candle sitting right there in the sell zone. We have another bearish candle right there in the sell zone, and the markets are still pushing higher. So it looks like we might be getting a little bit of a rebound, and potentially if we put in a Fibonacci retracement, that might give us a little bit of a better idea of what the markets might be doing in terms of a rebound. So if we look at just the most recent high that we put in versus the most recent low, the markets may be retracing back up into this 50% level, which puts us right around 1350. So you might want to get that level marked in your charts. You might want to probably going to see some selling pressure coming in at that point. So start to look for some bearish candles in the setup zone on the daily chart, and that might give you some guidance here in the upcoming days as to where the market might be heading. Taking a look at the 480 chart, we can start to see the semblance of a flat level that had set up here. We can see it even a little better on the 240 chart. But keep in mind, when we're looking for these momentum flat level trades, we want to be going in the direction of the trend. We don't want to be taking these against a trend like this chart structure here. So we can't really call this a flat level, even though we have a breakthrough. We're looking for flat levels setting up in this chart structure to the downside, not necessarily to the upside. So we would need to get a lot of these moving averages moved around and setting in some higher highs and higher lows in order to get that momentum trade to the upside. So, but in any event, we could still have a break of this flat level and still get back up into this 1350 level. And that would be consistent with the width of this consolidation, which is somewhere around the 1310 level up to that 1328. It's roughly about 18 points. If we put that together, 28 and 18, puts us right about at 1350, which would couple pretty nicely with that 50% retracement. And then you can expect probably to see some sell orders sitting around that level to take advantage of that level. So keep some of those things in mind on the ES, and then let's go ahead and take a look at the Russell. And there's some levels coming into play on the Russell. As you can see, similar scenario. We have lower highs, lower lows in play for the last couple of months here on the Russell, just like the other indices. We've got the Fibonacci put in here on the daily chart, looking at that most recent high to the most recent low. And that 50% level comes in right around, right about 785, 786. So the key level here on the Russell is going to be that 780 level. So we don't really have a coupling of that 50, 62% fib retracement at that 780 level. So we could probably look at that 785 level, and you could probably see some sell orders coming in right around that level. As you can see on... you can see it a little better here. Let me get a line in there on the weekly chart. You can see it a little better right here on the weekly. There's that 757 level that we had, and then another level here at that 780 level, where we have a number of touches right here within the last several months. So two levels there. We really kind of broke through this 750 level, and then we're kind of bouncing off of that, but we're bouncing right back into the 780 level. So a couple levels there to keep an eye on the Russell. And then again, looking at some of these levels, again we have similar to the ES, we have a couple touches there at a resistance point, and it looks like a flat level, but again we're going against the predominant downtrend here, and then also we're to take a break of the flat level at 773 when we have that resistance level at 780 isn't necessarily what we want to be doing in terms of trying to take advantage of a momentum trade. We always want these momentum trades breaking in the direction of the predominant trend. So we'd really need to see a change in a lot of these moving averages moving to the upside, and then start putting in some higher highs and some higher lows. And here we're looking at the dollar CAD, and as you can see, I just have a Fibonacci drawn in here from the most recent low that we had about a month ago, right here at 98, and there's been some support down around this 98, 97 level, and we've had a number of touches back here around almost this 99 level. So broke through that a little bit, but got a bounce off of here over the last 4 or 5 weeks, right back into that 62% retracement level of this from this high up here at 1065 in that move. So looks like we're getting some selling orders coming in here, and we're getting a little bit of a pullback. We do have some divergence on some of the lower time frames, like the 480 and the 240, which is telling us that this trend here, this run, is weakening, and we're going to get a little bit of a deeper pullback. But we do have a bullish candle appears to be setting up. We'll have to see how that closes out at the end of the day, right in and around that buy zone. And then we actually have a bullish candle closed out on the 480 with a break of the high. And then we also have that same candle with a break of the high as well on the 240. So it could be a nice little trade here for a trend flow, but you want to be aware of some of these other levels here of resistance right up around that 1029 level. And potentially we might get a run back up to that level, but I'd be looking for a 1-to-1, potentially maybe a 2-to-1 reward to risk on this particular trend flow trade. More than likely, with this divergence in play on a number of time frames, it's probably going to be a deeper pullback, and it could even be, if we did a Fibonacci retracement, let's do it here on the 480. Could be a little deeper pullback all the way to, all the way down to the 101.2 level, potentially all the way back down to that 1 level. So it really depends, but there could be a little intermediate setup. Markets don't always go point to point and run straight in a line, so we might get a run back up and then a rollover. So that's what it looks like on the dollar CAD. And taking a look at crude oil, here we are on the weekly chart, and I just put in a Fibonacci retracement here to get a gauge on where this pullback's coming into, and it's really lining up pretty nicely with that 62% level. And then we can go back at a key price action resistance level that was in existence way back probably this time last year in the summer of 2011, and we can count almost 1, 2, 3, 4, 5, 6, maybe 7, 8 weeks where this level right around that 89, 90 level, 90.5, has been resistance for quite some time before we put in that new low back at actually the end of last year. And so it seems like that was the end of last year, and then this level at 95 was the end of last year in December. So this really is the low for this year, 2012, this $90 a barrel number. And so I'd be looking for this resistance now to become support, and look for probably a bounce. We've already got a small indecisive candle there, which would tell us that there potentially might be a bounce off here. Wouldn't be going long, being that the crude oil numbers are coming out tomorrow on Wednesday. And then even though we have an optimal chart structure, going short, we also want to be careful on our shorts for crude oil, since we're up against that key level. We have a trend flow candle, a bearish candle setting up in the sell zone on the daily chart. We already have some bearish candles setting up in the sell zone on the 480 and the 240. But in order to filter out some of these trend flow trades, the optimal trades from some of the poorer trades, we want to keep an eye on some of these key levels. And whenever we can identify some of these key levels, we kind of want to take a cautionary note here and take a breather from the shorts to see where the markets might be headed next. And one clue might be some of the supply and demand numbers coming out tomorrow on Wednesday for crude oil. That'll give us an idea of where things might be headed next. So just a cautionary note there on crude oil. And that will be the wrap-up for the Open eCry market commentary for the week of May 29th on the U.S. indices, currencies, and commodities. And we'll look forward to speaking to you next week on the Market Update.